Bitcoin has recently traded below 70,000, Ethereum has fallen below 2,000, and XRP has slipped below $1.30. If you only looked at prices, you might think crypto is struggling, but behind the scenes, something very different is happening. This week, the S&P 500 hit a new all-time high, CME officially launched 24/7 crypto futures and options trading, Ripple became a day one clearing partner, RLUSD expanded into another major international market, the Clarity Act gained momentum in Washington, new regulated crypto products move one step closer to becoming reality, and one of the strongest performing sectors in traditional markets may be quietly signaling where Bitcoin goes next. So which story matters more? The price action everyone sees, or the infrastructure being built behind the scenes? Nothing in this video is financial advice. Always do your own research before making any investment decisions. This channel is for educational and entertainment purposes only. Welcome back to Ledger Pulse, your source for the biggest developments shaping digital assets, blockchain infrastructure, tokenization, and the future of global finance. If you're interested in XRP, Ripple, RLUSD, institutional adoption, and where blockchain technology is heading next, you're in the right place. Let's get into it. While crypto has faced recent selling pressure, traditional markets are telling a very different story. The S&P 500 just closed at a fresh all-time high. That's important because strong equity markets typically signal confidence, liquidity, and increased risk appetite among institutional investors. Historically, periods of strong performance in traditional markets often created favorable conditions for emerging asset classes. So when investors become more comfortable taking risk, capital starts looking for new opportunities. Increasingly, digital assets are becoming part of that conversation. The significance here isn't simply that stocks are up, it's that capital remains available. And when capital is available, innovation tends to benefit. One of the most important stories this week came from CME Group. CME officially launched 24/7 trading access for cryptocurrency futures and options. For years, institutions faced a major challenge. Traditional markets operated on schedules. Crypto operates around the clock. The result was a disconnect between traditional financial infrastructure and digital asset markets. Now, that gap is beginning to disappear. More than 7,000 contracts reportedly traded during the opening weekend, showing immediate demand for around-the-clock institutional access. But here's where the story gets even more interesting. Ripple Prime was announced as a day one clearing partner. That means Ripple isn't simply watching institutional adoption happen. They're helping facilitate it. As Wall Street continues building digital asset infrastructure, Ripple continues appearing in increasingly important positions throughout the system. And that's a trend worth paying attention to. While much of the market focuses on XRP's price movement, Ripple continues expanding one of its most strategic products, RLUSD. Ripple's regulated US dollar stablecoin is now becoming available to institutions in Turkey through new partnerships. That may not sound exciting at first glance, but stablecoins are rapidly becoming one of the most important innovations in finance. They combine the stability of traditional currencies with the speed and efficiency of blockchain settlement. And Turkey represents one of the most active digital asset markets in the world. The country processes enormous crypto transaction volume annually and has become a major center for digital asset activity. Every new RLUSD corridor, every new institutional relationship, every new market expansion strengthens Ripple's broader ecosystem. This isn't just about a stablecoin, it's about building global financial rails. One of the most significant developments may be taking place in Washington. Lawmakers are expected to resume discussions around the Clarity Act. Meanwhile, Coinbase's chief policy officer recently stated the legislation appears to be getting closer to reality. For years, regulatory uncertainty has been one of the biggest obstacles facing digital assets in the US. Questions surrounding jurisdiction, compliance, and asset classification have slowed adoption and discouraged participation from larger institutions. The Clarity Act aims to establish clearer rules for the industry. And whether you're bullish or bearish on crypto, one thing is hard to argue against. Markets function better when the rules are understood. Regulatory clarity doesn't guarantee success, but it removes uncertainty. And uncertainty has been one of crypto's biggest hurdles for years. Another story involves Kalshi. Recent filings suggest efforts are underway to certify perpetual-style products connected to assets including XRP, Sol, Doge, and other cryptocurrencies. It's important not to overstate this development. Nothing has been approved, nothing is guaranteed, and timelines remain uncertain. But what it does show is continued progress toward expanding regulated access to digital assets. For years, access has been one of the industry's biggest limitations. The easier it becomes for investors and institutions to gain compliant exposure, the larger the potential market becomes. And once again, we're seeing infrastructure move forward. One chart that deserves more attention right now isn't a crypto chart at all. It's the IGV chart, the iShares Expanded Tech Software Sector ETF. Over the years, Bitcoin has frequently shown a strong relationship with growth-oriented technology stocks. Why? Because both tend to benefit from similar macroeconomic conditions. When investors are optimistic about innovation, artificial intelligence, software, and future growth opportunities, capital often flows into both sectors. And when liquidity tightens or risk appetite disappears, both can come under pressure. Recently, IGV has been pushing higher, while many crypto assets remain under pressure. That's an interesting divergence. Historically, Bitcoin has often followed the broader direction of growth and technology sectors over time. Not every day, not every week, but the relationship has been difficult to ignore. When software and technology companies attract capital, that often signals investors are becoming more comfortable owning risk assets. And Bitcoin has increasingly behaved like a high-growth technology asset rather than a traditional commodity. This doesn't guarantee Bitcoin immediately follows higher. Markets rarely move in straight lines. But if technology continues strengthening while institutional infrastructure continues expanding, crypto investors should pay attention, because sometimes traditional markets signal what's coming before crypto fully reacts. And right now, one of the strongest sectors in the market remains technology. Here's what's fascinating. If someone only looked at prices recently, they'd probably conclude that crypto is struggling. Bitcoin has traded below 70,000, Ethereum has fallen below 2K, and XRP has dropped below $1.30. The market feels weak, sentiment has cooled, and many investors are frustrated. Social media is once again filled with predictions of lower prices. But here's the question investors should be asking. If crypto is failing, why is institutional infrastructure expanding? Why is CME launching 24/7 trading? Why is Ripple becoming a clearing partner? Why is RLUSD expanding internationally? Why is Congress discussing comprehensive digital asset legislation? Why are regulated crypto products continuing to move through the pipeline? Historically, some of the most important infrastructure developments occur during periods when prices are disappointing. Retail investors often focus on the chain in front of them. Institutions focus on positioning for what comes next. That's why moments like this deserve attention. The market is telling one story, the infrastructure is telling another, and eventually, those stories tend to converge. Let's put everything together. Right now, we're seeing the S&P 500 reach another all-time high, CME launch 24/7 crypto futures and options trading, Ripple becomes a day one clearing partner, RLUSD expands into Turkey, the Clarity Act regain momentum, additional regulated crypto products move closer to reality, technology stocks continue outperforming. Meanwhile, Bitcoin remains under pressure, Ethereum remains under pressure, and XRP remains under pressure. That's the contradiction. The prices suggest caution. The infrastructure suggests acceleration. The technology sector suggests risk appetite is alive and well. And history shows that infrastructure often comes first. Markets eventually catch up. The biggest stories in finance rarely happen all at once. They happen gradually, one partnership, one regulation, one product launch, one market expansion at a time. That's what makes these developments so interesting. Because beneath the short-term volatility, we're watching the foundation of a new financial system continue to take shape. Whether it's RLUSD, whether it's CME's 24/7 markets, whether it's regulatory progress in Washington, or whether it's the growing connection between technology markets and digital assets, the common theme remains the same. The infrastructure keeps expanding, capital keeps positioning, and eventually markets tend to notice. The question isn't whether the financial system is changing. The question is how much of that change has already begun. If you enjoyed this breakdown, be sure to like the video, subscribe to the channel, and turn on notifications so you never miss an update. Do you think the market is underestimating what's happening behind the scenes? And what happens first? Bitcoin reclaims momentum, XRP breaks out, or the Clarity Act becomes law? Let me know in the comments below. And as always, thank you for watching, and we'll see you in the next one.